Today, Bitcoin prices cross back above 20K. MasterCard launches a new tool to fight crypto fraud. And we check in on the state of crypto regulation ahead of the midterms. Welcome to CNBC's Crypto World. I'm Makor. It's another day of green for digital currencies, with Bitcoin rising above $20,000, Ether jumping to $1,300, and Solana climbing to $34, all by noon Eastern. Just as crypto was rising this morning, ARK Invest Cathie Wood took to CNBC's Tech Check to discuss the firm's crypto strategy. Take a listen.
All of these networks in the crypto space that we're focused on are public, they're transparent. So we can look into the networks and see what's going on. And we had a really important test in this last meltdown with Celsius going bankrupt effectively. What we saw there was the margin calls that took place on the public networks. They were met. And it was the hedge funds who were left holding the bag, the more opaque things. So I think the crypto asset world is, first of all, extremely exciting and highly transparent. So we can bring the data and help our clients understand what they're investing in and why they're investing in.
Okay, let's talk about the top stories. First, one of the world's biggest credit card companies is moving deeper into crypto with a new fraud prevention tool. Against a backdrop of growing crime in the evolving digital asset market, MasterCard launched a product today called Crypto Secure. The company told CNBC exclusively about the launch, saying the software will help banks on its network identify and block suspicious transactions associated with crypto merchants using AI. The service is powered by CipherTrace, a blockchain security startup MasterCard acquired last year. The card network's president of cyber and intelligence business said the move is about ensuring its partners can stay compliant with the complex regulatory landscape. Next, sticking with the regulatory theme, the Treasury Department warned yesterday that unregulated cryptocurrencies could pose a risk to the U.S. financial system. The warning was part of the first major public report released by the department's Financial Stability Oversight Council on digital assets. The council says assets like stablecoins, as well as lending and borrowing capabilities on the crypto industry's trading platforms, present a, quote, important emerging vulnerability. Treasury Secretary Janet Yellen said the report highlights the need for appropriate regulation, including enforcement of existing laws. Finally, a federal court says the CFTC can serve lawsuits by posting in online forums. The District Court for the Northern District of California ruled yesterday that the CFTC appropriately served UkiDAO on September 22nd. We told you last week that UkiDAO was notified when a paralegal from the agency posted the complaint to an online forum dedicated to DAO members discussing governance issues. At the same time, members were notified through a help chat box on the platform's website. According to court docs, the DAO has no listed headquarters, physical office location, or mailing address, which is where lawsuits normally get sent when companies get sued. According to CoinDesk, UkiDAO operates a protocol that offers illegal, off-exchange tokenized margin trading and lending services. The DAO reportedly has 3 weeks now to respond, so if there's no response by the middle of this month, the CFTC could win the case by default. Okay, for our main story, let's take a closer look at the state of crypto regulation and enforcement in the US. Some of the biggest names in crypto have been ramping up calls for regulation this year and say the industry just wants to play by the rules. But what do the rules look like right now?
So I think the best way to describe crypto regulation in the US right now is fragmented. We have a number of states that have gone in very different directions.
In the face of little guidance on the federal level, states have taken it upon themselves to write the rules of the road for crypto businesses. According to the National Conference of State Legislatures, 37 states have brought legislation on digital assets this year, and while most states have some kind of crypto regulation, some are stricter than others.
Wyoming, where you've seen digital bank charters via Speedy given out, whether you look at New York, where we have a bit license regime, which I think even the New York State Department of Finance would call onerous and complicated, and I've heard from them and others that they're trying to make that easier. We've seen different regimes in Ohio, visa payments of taxes, in Iowa, in other ways.
Last month, when California Governor Gavin Newsom vetoed a bill that would implement a licensing system similar to New York's, he said in a statement that he wanted to see federal regulation before California enacted too many rules for crypto businesses. But Congress has been slow to act. Lawmakers in the House and Senate have introduced more than 20 bills aimed at regulating crypto this year, but so far, it seems unlikely that any of them will pass. We're just a month away from the midterm elections, and crypto voters are becoming a bigger part of the electorate. A survey from Han Ventures found that more voters in key battleground states hold crypto than they do a union membership card.
That you have a lot of people of voting age that have grown up with the internet, that view digital assets as assets. These people can vote. They are educated. They care. We do see senators getting on board, and I think they are smart enough to see this. But if they are not, they will not be in power very long, because the one thing I can tell you is, improve federal legislation or not, this industry will grow. And so whether or not it's a November 2022 event, certainly by November 2024 it will be, and thereafter.
Congress may not have passed federal guidelines for the industry, but law enforcement is still grappling with crypto crime. A study from Chainalysis found that while the number of crypto scams has fallen this year, the number of hacks and stolen funds is growing. DeFi has proven particularly vulnerable to these kinds of crimes.
There are a lot of challenges when it comes to market integrity in crypto, but in a lot of ways they're natural for an industry that's very new, where there's technology that's still being battle tested. It takes time to address security gaps, etc. Regulation is still evolving, so regulators are still catching up in terms of how to best supervise. And finally, there's a lot of buzz and FOMO, and buzz and FOMO are fertile ground for scammers and manipulators.
Solidus Labs is a risk monitoring and market integrity service provider for crypto exchanges and institutions, and its chief operating officer says the industry has come a long way over the past few years.
It's definitely incredible progress. I've been in the space for about 5 years, and I remember a time not that long ago where we would wait months to hear regulatory news. Now it's every day. It's a very good signal of maturity and of the evolution of the space.
But in the wake of the so-called crypto winter, the collapse of several crypto businesses, and battles over potential unregistered securities, lawsuits are mounting, and the Securities and Exchange Commission, the SEC, is trying to get control of the industry using court rulings. SEC Chair Gary Gensler has made it clear he thinks most cryptocurrencies are securities and should be regulated by the agency. And experts say expect to see more of this regulation through enforcement.
It's definitely not ideal. Regulation by enforcement is never ideal. When you have a new asset class based on new technology, there are just a lot of new challenges. And part of the issue is that there's not yet legislation and regulatory rules that are clear on how to exactly be compliant. That being said, as those are evolving, and there's DC has definitely entered the era of crypto market integrity with interesting legislative approaches and a lot of discussion. But as those are evolving, regulators are basically trying to use the tools they currently have. So basically enforcing based on existing law.
The lack of clarity around what laws apply to cryptocurrencies and companies hasn't stopped the industry from growing, though, and the lines around crypto and securities will continue to blur as more industries look to use blockchain technology.
So much of the promise of this space will come through security tokenization, and that's really been somewhat omitted, and it will be the bigger part of the conversation when we fast forward a few years.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.